Casino operator Star Entertainment has this morning put its shares in a trading halt after it failed to produce its half-yearly accounts on time. It again raises some questions here about the Star's ability to survive in its current form as management struggle behind the scenes to get more funding. Business Editor Ross Greenwood is with me this morning. Ross, good morning to you. Can you explain what's happening here?
I can indeed. So today is the final day for most companies to be able to produce their half-yearly accounts. The Star's accounts are due today, and quite clearly now there's issues going on behind the scenes which would suggest that directors are not able to sign those accounts. Remember that if they sign the accounts, they are legally obligated to those accounts as well. Now, the Star has been desperate to try and hang on, to find the cash to keep itself surviving. So from that point of view, it is now in a situation whereby the Star's shares are suspended from the stock exchange, and that will remain suspended until such time as either something breaks or indeed they are in a position where they can sign the accounts. So underneath all of this, the Star has been desperately trying to find the funding to be able to continue its operations. And it's said right along the way in previous announcements to the ASX that it is not necessarily guaranteed to be able to come to conclusions. There have been some suggestions that Oaktree Capital could put in some $450 million worth of debt. It's also known that there were two tranches of $100 million apiece. The Star got the first tranche. The second tranche was not delivered because it did not hit the hurdle rates. If we have a look at this, say, for example, in the second quarter, its loss was $18 million. It did have cash, including that debt of $78 million at that time. Subsequently, it sold the Treasury Casino in Brisbane and also the Lyric Theatre in Sydney. It also has approximately $430 million worth of debt. One important aspect of this story is really about the federal government and what it will do. After all, it's intervened to try and save the Whyalla Steelworks from falling into some form of administration. It's also gone and saved the airline Rex. Well, there are 8,000 employees at the Star in Sydney and also in Brisbane and the Gold Coast. Well, their futures may be in doubt if this business were to fold. That's the key right now. But if we have a look at the stock price of the Star over a period of time, this is what it's done over the past 3 years. It's literally disappeared to nothing. Now, on top of all of those debts, there's still a decision that has to come from AUSTRAC, the anti-money laundering agency. And really, there's a significant penalty that whoever might take over this business would also have to pay. If we have a look at the Star's share price just over the shorter term, before this suspension, they've been sitting pretty much close to all-time lows, 13 cents. So for the debts that the company has got, which are the best part of $450 million, plus that additional penalty from AUSTRAC, on top of that, it's also got a situation where the business is only worth between $300 and $350 million on the stock market. So right now, not great news for the Star that those directors quite clearly have not been able to sign off on these accounts.
Ross Greenwood with that breaking news. Thank you.